Hard to- all right. Welcome to Sauce Factory Wednesdays. Happy to see everybody once again for another lovely Wednesday. Today we're gonna be going over some nice technicals. It's been a lot of earnings this week, a lot of quick scout plays first thing in the morning. I got a nice little hit list up here. I would like to review AMD, Amazon, Pfizer, Starbucks, go MasterCard, also crude oil. We're gonna go over a couple of tickers. If you have any extra tickers, please throw them in the chat and we'll get to those too as well. And I know a lot of people be looking for the quick plays during earnings time. The IV flush is a great play to start your morning off with. You can pretty much be done for the day. One move if you pick the right setup. When I mean pick the right setup, choose the right ticker, make your list like I have here, right? So what I do is overnight, we in the community, they post the earnings chart from Earning Whisper or whatever, right? So I just go in there and figure out who's gonna be doing what. I just add them to this tab. You can just click little red tab. Yesterday was Amazon, so that happened at the market. Anybody happens at the market, I'm gonna be looking for the next day opportunity to play it, right? I want to catch that volatility of the next day opportunity to take advantage of it. Amazon popped up and it went haywire yesterday and it gapped up overnight a whole nine, right? Let's pull up this standard hours real quick. Get that out the way. Do 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 do. I'm on extended hours. But yeah, while it's loading. So when you see opportunities like this, they very quick, easy to play. Thing about it is holding positions overnight. What happens, no matter which way you play, if a stock do this crazy wick, like you see here, right? It wicked way down here, way down here. So, boop, boop. All right. It did all of that. Now, by doing that, all they do is tear your contracts up. And they're gonna rip up a lot of people contracts. I mean, to shreds, no matter which way you go. Volatility is not good for option contracts, especially overnight. And if you don't buy no time on them, they just gonna be ripped to shreds. It had no decisive move whatsoever. It just kind of like went in a stalemate, right? Then the next day they decide to go ahead and move, gap up, and do this little funky little number there. So let's go back to regular hours, and then we're gonna drop down to a lower time frame. Also, I hate how they move the session breaks. It used to be convenient to get to it, right? You gotta do all this extra stuff. All right.
It ate up my May contract.
Oh
I
my
had one
goodness.
for 215,
Yeah.
May 17th,
Mm, they mopped you.
dead in the water.
Man, I'm gonna tell you like this. Anytime Amazon have earnings, whatever you in, get out of Dodge. It's a long time ago. You used to be able to let's hold an overnight put because the cheese gonna slide right off. You feel me? You just hold that overnight put and then you smooth. But now they actually start turning a profit. Now you get this crazy little reaction because we know Amazon is a very dominant force in the logistics space, right? They really put the screws to a lot of their competitors. They really muscled FedEx out the way. They put a hurting on UPS, even the US Post Office. They put a beating on these boys. So you really got to understand, they some beasts when it come down to this logistics space. Okay, they had to go to let's go back to a 3 minute chart, try to get the right amount of candles, but we don't have to do all this janky stuff. So you ain't the only one. I know somebody also played a straddle and didn't end well for them all. All I can say is like, well, they sitting there this morning holding their face too as well. That's all like I was waiting. I said, man, I ain't holding nothing overnight. I'm not doing no more overnight plays on earnings. I'm just gonna simply see what it do in the morning, and I'm taking advantage. Point blank period, right? So what I like to do, since it want to be janky, so I'm gonna cut the data down. This is all I need to see right here. This is all we need to see. Boop. This is a little trick. So go to the rewind button, then you just simply cut off what you want to see, and it makes it easy to review. So now you can drop down to a lower time frame. You don't have to worry about stalking the chart, right? You don't have to worry about like, oh, I gotta find all this, that, and the third. Okay, cool. Now we smooth. All right. So as you see, it gapped up first thing in the morning. Bing, bang, right? Gap, gappity gap. So as soon as this thing hit and I seen it start coming down, right? I'm like, I dropped down to the 15-second charts. I know a lot of people don't like this chart. All right. A lot of people think the 15-second chart a little nutty. Okay. You used to the speed. You smooth, right? You know, the chart ain't fast. You just looking slow. That's all it is. So you just look a little bit faster. You good to go. All right. I'm trying to tell you now. The chart ain't that fast. It's just looking too slow. So the moment I seen it pop up, I gotta ask myself, like, what are they gonna do? First thing I want to do is identify the highest point, right? The highest point, that's my resistance. If they're gonna take it, well, I'm going long. They're gonna break below, well, guess what? I'm going short. So I'm identifying this, all right, and I'm processing this information. I only had a couple of minutes to make an intelligent decision here, right? I'm like, we got a gap. They fall into the gap. I'm gonna go short. I'm gonna try to hurry and give me a contract real quick, like. Is they gonna fill a gap? Maybe yes, maybe no. But the moment they find support is the moment you get out of dodge, right? Because your oscillators, once again, like I tell you, your oscillators get in the bullish territory. You gotta ask yourself, like, okay, is it really gonna be drugged down here, or will I find some form of trouble? Right? So the moment you see it breaking down, you simply take your opportunity. Stop loss is the last swing high. You're gonna go short here, right? You gotta understand. Let's do yes, short position. Boom. You want to take that. Stop loss to high. The goal is the whole entire gap, but if it finds support anywhere, so right here, this is my 200, 513, right? The moment it breaks the five, I'm riding it down until it finds the first layer of support. The moment it finds support, I'm out the trade. That's all I do because these contracts, thing about them is this: the moment you enter that trade and it finds support because of the volatility is rushing back and forward because it's super high right now, the profits come quick but they also lead just as quick. So you can come from 100%, 150, 200% trade and come back down to a 20% trade in a matter of seconds if you do not exit on a proper time, right? If you stay there too long, fall asleep at the wheel, it will tear you alive. So you got to say like, hey, when is it going to break down? So you go down to the 15 seconds and that's what I do. Go find a little razor sharp entry, right? Then from there, I'm looking at the 1 minute because I'm hoping that it's gonna put in a stronger move. So this will happen. Broke down, great, strong body candle. I see this little pin bar come in. Get out my way. So I see the little pin bar come in. I'm like, what you gonna do? What you gonna do? You gonna break the five? You gonna hold it? Next candle come in. I said, bet you hold the five, but the 13 stopped it. It wicked at 13. I'm like, okay, it's pulling back. Let me get out of dodge because my profit's about to go. So even though it pulled up, we seen what happened after the fact, but this little pullback here will pretty much crush the contract. So you want to be mindful of that. Do not give up your profits. I was shooting for the whole entire gap, didn't get it. It found support. Well, guess what? Remember, my oscillators, they were screaming for this upside. They was like, oh, we've been beat down. They sold it down so they can pick it back up, right? And as they doing so, they like really pulling on it. So I want to take advantage of these 3 minute move. I was actually only in this trade for like 4 minutes from open of the contract to close of the contract. I'm only in the trade for 4 minutes. And you have to make a clear cut decision because that contract will not survive with all that volatility. So that's one thing you must understand. When you're playing moves like this, you need to get in, you need to get out, no hesitation. Because you hesitate, there goes all your profits get wiped like quick, right? So in and out, no huss, no fuss. Always recommend put like a 5% leverage on it, right? So if you looking at your account, do a 5% because they'll 10x on you real quick. So you don't have to really say, I got to put all this money on this trade. I'm just looking for a quick little flip, boom, boom, and I'm out the way. Right. So that's Amazon. Let's take this off. And then we're going to go back up to a higher time frame real quick. I like a 12-minute chart. Yeah, I know some people use 15, but you don't understand the 12-minute. It's a even breakdown of the 1 hour because you get every 5 candles equal 1 hour candle. That's why I like it. That's why. So as you see, right, it started playing around. I took my profits. I'm not here anymore. I left and I started looking for other markets. Did it fill a gap? Yes, it did. It came down, filled the gap, and came up. Now, this is your second chance opportunity if you choose to follow up or, catch the rebound on the trade. When it come down to these gaps, right? In the futures market, we call these fair value gaps, but in the option market, they look just like regular, gaps in space, well, as far as price goes, right? But you see it's a full body candle here. Once they rebalance this candle here, because every candle got to be rebalanced, you notice they start buying and support. Once you start looking at the candles no longer making a lower low and your moving average is starting to curl up like this, boop, boop. And then you got price doing this. All right, you pay attention to that, right? If you're gonna be in a true downturn, you're gonna see like, hey, price should not be finding support and slowly hiking. You notice the candles are getting smaller. You no longer know full body reds. They like stopping, hike, 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 hike. Then boom. That's how you know you're coming up to something, right? You can say, well, if I want to take this back long again, I want to be like looking at this high here because it's the last failure swing to the breakout, right? So I'm gonna look for that high and what they did, run liquidity, right? Because people had stop losses because they went short. They said, hey, like I told you, if I was going to go short, my stop loss is going to be at structure. That was the highest point of resistance at this time. I want to be up here. They ran, if you went short the first time, they ran you stop right here. They said, oh man, let me get the heck out of Dodge. Everybody know the interactive broker. Now they making it where you can trade it just like in the futures market and the forex market by putting your stop loss on a chart. And where are you going to put your stop loss at? The highest point. Why? Is no need to risk more money. So it common sense to say, I'm gonna put my stop loss here. So when they went short again, guess what? People put their stop loss here, right? So we're gonna put that there. And I got a template. Bing. There we go. So when they put it there and they took it short, this is where the traders took their money, slight pullback. Then somebody else say, like, hey, we want to flip this back around again and want to go long. Well, how can we get traders to sell us their shares? We got to convince them it's going to go short some more. So they had to convince somebody to take the bait, right? Guess what? They're going to dump it hard again. Now, when you see this candle come in, your instinct to say is like, hey, it's a pullback. I can get in on this. So you get in here, they like playing with you, playing with you, like, oh man, it's consolidating. You're gonna break down. Oh man, that's a resistance, that's the 200. They're gonna break down. I'm good, I'm good. They just gonna arch it over and dump it. Well, guess what? They got you. They straight finessed you. They took it up, right? Let's see. Let's pull the oscillators out. So as you see, what's happening here? Your MACD crossed over to the upside and it slowly started coming. So right here, you see that separation. Now here's another key component when you trading momentum and understanding momentum. The moment these MACD K2 lines right here start separating like this, that means momentum is increasing. So you see what happens when it was falling? They was far apart. They say, oh, now we good, Playboy. And there's a little juke letting you know, like, hey, it's some instability in here because that's that bar change, right? And they start making it jump like this. But when it starts spreading apart, they are really going to be pushing. But the moment it done this, you should not been selling it anymore. The moment this thing flipped and then crossed over and you didn't get another crossover here, you should have got out of Dodge, right? So these things you want to pay attention to because they are about to run your pockets. They about to run you quick, fast, in a hurry. So you want to pay attention to these things. Now it's at a discounted price. How we know it's at a discount? Well, we fancy with the fibs, so we're gonna run one. So from the last swing low to the current swing high, right? We don't want to get too busy with this, so let's cut these moving averages off. Where did they take it to? Almost a 78% discount, right? So they took it to the 65, 78% off. Well, guess what? That is a great level for other investors to say, hey, I wouldn't mind buying that. It was at a high of $182.28. Hmm. Catching it at $77.43 is not a bad deal for me. I'm gonna go long here. So guess what? While you still convinced that the market gonna sell it down, they say no, 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 no. My boy, it's my turn. Get out the way. The Bears had their fun. If you didn't get in here, or at least catch this last little quick scalp here, you had 24 minutes to finesse some money out of this market. After that, if you fell asleep at the wheel, guess what? You got taken. All right. They took you for everything you got. Yeah. Yeah, yeah. You looking sad now right now. You crying in the car. All right. So when they done that, discounted price, it's a great buying opportunity for other traders. So they took it long. Didn't look back. Now one bearish candle in sight. They did the stutter step, popped it. We lit. Now you gotta ask yourself, why did they take it back here? One, they took the sell side liquidity, or you can pretty much say buy side liquidity, right? They took you right on out. They got you. Because remember, people stops are still sitting here. So they stop. Oh, yeah, people executing, filling their orders. Okay, great, great, great. The people who still went short, they got to fill these orders because you got people still, they get the hoping, they get the smoking. They crispy over here. Okay. This when they start saying, oh man, it's coming down. They start hoping. Then they start smoking. Now they on fire. They got to get out. So as you start buying your position back, okay, you get that last little push. Now they done. Now, the great thing about the market is this, right? We gotta ask ourselves, why did they stop here? You know the saying, hope you get your smoke. So you ask yourself, always put a line there, right? Always put a trend line here, some type of horizontal line, real quick, and you just look to the left. Ask yourself, why did they stop here? All places, right? So I want to know what's so special about this area right here. Let me get these section breaks out so we don't look all crazy. Boom, boom, boom. Boom. What is that? Good people. Is that not another fair value gap? So if you was up on your sauce and you had your gap marked out, right? Boom. You would have seen this gap and you could have had that marked up and say, hey, Amazon, I'm charting you out. I'm fully focused on you. What they do, they come fill the fair value gap. Then the cheese starts sliding again. It's like, okay, cool. We took it up there. Now we're going to dump it. And if you miss that one candle, the people who missed it, because they say, oh, it's going long. They took the high. It's a breakout because you got breakout traders, right? Breakout traders love to take these trades right here. They're going to say, hey, when it takes that long, it means going to go high. I'm going to take it. We're going to the moon. If you got some decent sense, you'll say close of the body is my stop loss or whatever this body close is. You want to definitely have your stop loss below that. So in the moment it breaks, stop loss the previous candle, or you can do one candle before because you don't want to risk too much on a breakout trade. Depends on the size of the force of the breakout. You don't want to give up too much money, right? Because it's already like a 2 point move here. If you come way down here, you're looking at 3 points to see if you're wrong. And guess the heck what? If you fell asleep at the wheel once again and not understanding what was at risk, you would have been wrong because it's a 1-on-1 trade. That ain't worth leaving the house for. Straight up and down, right? You need something like a 1 to 3, 1 to 6, 1 to 10, something along those lines. But a 1-on-1, you should not roll out the bed and try to go get it. You say, oh man, I can play it from here to here because if you seen the gap, you say I can play it from here, but what's your risk? Even if you say your risk is there, it's still not worth rolling out the bed because one wick you trashed and you overpaying because these people have been partying back here. They've been partying back here. You mess around and enter up here, you're gonna get swallowed. You're gonna get swallowed. Yep. Then you're gonna be crying. Okay. So you don't want to party up there, right? So be wise, ask questions, ask why are you bumping your head here, right? Even if you didn't, here's the thing, you'll say, oh man, that was a rejection candle. Well, ask this question. Pull a line down here. The moment of first rejection, say, hey, got up there, that thing rejected hard, right? We're gonna ask questions. Like, okay, cool. From the body close to this high, that was $1.26 rejection. Why did it reject there? Put a line, hurry up, look to the left. The moment you see price react a certain way after having this much force, start acting a certain way, put a line there, hurry up, look to the left, find out what can be the problem. What can possibly hold me up and put a damper on my day? If you don't do that, and you just say, man, I got this stop loss. I ain't moving my stop loss. I'm holding this arm. Don't have a stop loss. Like we know some people don't use stop losses. You're going to be smoked salmon. All right. And then look at it. Let's look at the oscillators, right? Everything running smooth, 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 smooth. Now you see a little hiccup right there? That thing said, they folded like a cheap chair. Said, poof, dump, dump, dump. Murder she wrote. Poof, 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 poof. Nice little even star. Weak sauce, indecisive candle, bearish engulfing. Smoke them out. Smoke them, you got them. Traders took that trade 10 out of 10. They will smoke you again. Okay. So you got to understand these things when you watching the market, paying attention, seeing what's going on, read the earnings reports, or not understand the company you're trading to as well. Because that also give you another catalyst to say, like, hey, they really shouldn't do all of that because XYZ, XYZ, XYZ. They should go down. Simple, simple, right? That's regular, degular. That's all hype. We know in recession, we know they laying people off. Nobody got the funds to actually push these people up. We currently in a bear cycle that's, cooling off, selling off, whatever the heck they want to do until they get their stuff together to try to pull us back up. So those things you think about, ask those questions in your head and say, let's be smooth with it. Are they going to go to the moon? Yes or no? Microsoft didn't go to the moon after their earnings, right? Let's go over there. I'll show you. SFT. And we know Microsoft winning. Do do do. It's 18. I want to go to the 1 hour chart, get less candles. So in the meantime, y'all smooth on that. Any questions about that last time? Let me know. Cool. So Microsoft had earnings on Friday, right? Now look what happened. They did something fantastic. They created this island gap, took off, poof, went up, right? Boom. Look what happened. They went up, made their all-time high for that move. After that, Microsoft slowly fell off. And look at them. Boom, 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 boom. And it's Microsoft. We know Microsoft. Everybody got a Windows something in their house. Everybody use Windows for something or all other things and products they produce, right? We know this. But they didn't have the money to run up. That should tell you something. When you're looking at the top 10, you want to look at the top 10 in the market and ask, are people currently buying this? If the answer no, then there's no money for nobody else. If they ain't winning, why should other people win, right? I know it don't make sense, but it will. If you go look at the top 10 holding of the QQQ or the NASDAQ or the S&P 500, these are the ones normally propping up the market. If they ain't doing good, that means people ain't spending money like that. If they gonna be doing good, that's when everybody else do good. It's across the board. When the top 10 are running amok, doing the most, guess what? Everybody got extra money to go dumping everybody else because the market look good. They see the SPY up, they see the QQQ up, and they're gonna have faith that hey, we in a good place. Let's spend money. But when they are down and they cheese is sliding, them boys are not gonna spend money like that. They're gonna say, let's get the quick play, but we're gonna short the market. See what I'm saying? See, they went, boom, and he went straight down. Yeah. Path to get fine, get a little janky. So they did this number here, straight down. Then they intensified the angle. Boom. And notice it came back up. Where they come back into? They didn't quite get there because they dumped them again. Dumped them on their head. It's that simple, right? So understanding that just because you pass earnings, you got all this good stuff, you beat all of this. So look, the more is like killed the game, right? Great, good bookkeeping. Doesn't mean you're gonna stay up there at all. Yes, Shante.
The way you drew your trend lines, is this the setup for a bump and run? And what's and if it is, then we would expect what to happen next.
So pretty much it did it. So
So it's
your
done.
trend
Okay.
line is so the target to be see this additional line here, right? Boom, boom. That's original trend. Then you had
Mm-hmm.
the screen correction, which is kind of like went down here per se, or you can kind of swing it over.
Mm-hmm.
But when it made that drop down kind of consolidation and retest of the trend line and breakout was that split difference. So there you
Okay.
go. Typically you'll go there, but the measure move is actually the drop to the first support level, but it didn't find support down there. It didn't have enough go. I always like to target a breakout to the next trend line. If it keep going, great, because it's supposed to be a bottom side reversal. It's supposed to be a bump and run bottom reversal, but it did not have the
Mm-hmm.
steam because they totally engulfed that. They say, "Give me that, take that, take that." I'm getting this money. But still was an 8 point move. That's nice.
Yeah. And when that larger candle or elephant bar
Mhm.
didn't take out the top of the prior candle, mhm, that's,
Yeah,
we can kind of say, oh, it doesn't have enough in it, maybe because it's not breaking that wick.
no, the fact that they still had that much selling pressure, unless they just gonna trick people out of that
Mm-hmm.
position. 9 and 10, you're gonna just follow the size of the candle. If they got that much energy to sell it down, I mean they really want to take it down. Now,
Well, I mean, while the candle is active, if you're
yeah,
looking at this
yeah.
from an active trade and you see it's just not
The
pushing up
moment,
enough.
yes, the moment they say, "Hey, this is where we're gonna stop at," right? Let's go. Let's actually get inside this candle, right? So we
Yeah.
here. This is this candle, and now this is the following candle. So the following hour. So let's go down 12-minute chart. So this is our following hour, right? So this
Mm-hmm.
happened at 2:30. It's 3. So once you see that price starts slowing down, you got what you got here. What's your pattern here? You go ahead and put that up there. Pattern question. Candlestick pattern question. What you got? What's your answer? Let me know you need me to zoom in.
Double top, double top.
No, it's
Mm-hmm.
not a double top, but it's also the body close within the other, right?
Spinning top.
Spinning top.
Yeah. Because you got two dojis at the top
Mm-hmm.
of an uptrend. Spinning top.
Mm-hmm.
Okay.
Hmm. Okay, I didn't see it like that. Okay.
Yeah. See, doji. They look they look like the spinners, the little tops. That's what I call it. To see you
Mm-hmm.
look at like the game spinning tops.
Yeah.
Like the back dojis, but a double top, it would have been for the person who said that. All right, this is what a double top look like. Draw it out. So you got support, you got resistance, you got support. Double top is price coming down, boom, bouncing, boom, and then breaking out to the downside. The double top is the V. The double bottom is this thing, thing. So double bottoms are bullish, double tops are bearish. That's for anybody who don't know, but this is what they look like. And your measured move is from support to resistance or resistance to support. So we'll go from resistance to support. You just go ahead, clone that. It's $1.34 move. Then you'll be looking for a move like that. Vice versa for the double bottom. But that's how they look. If you cannot remember double tops and double bottoms, just think about a double top is a V, double bottom is a A. Okay. And it's not a pattern until it breaks out. So when you look at these double tops, double bottoms, ascending wedges, descending wedges, it is not a pattern until it breaks out. It just is forming a pattern. It's a potential pattern, but it's not it until it breaks out. So don't try to load the boat saying, hey, this is a double top. And this what tears people up, right? The pattern whale up here, and they say, "Oh man, that's a double top. I'm gonna smoke them out. I'm looking, that's a 3-point move, da 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 da." And that thing do this, right? Oh yeah, you get it right there, boom, and it does that. Or worst case scenario, it does this number, turns into a damn W on you. Now you're crying in the car, talking about where did things go wrong because you loaded the boat back up here at 408 versus waiting till it breaks out. That happens. So always be mindful of the pattern is not the pattern until it breaks out. Now, can you take it down to support? Yes, you can. Do you fall asleep at the wheel once it gets to support? No, you do not. You watch the trade, you monitor the trade, and see if it has more, take more. If it doesn't, get out. Remember your 20-mile marches, right? That's a concept I need to go over with y'all. But yes, it is a spinning top. That was a bearish reversal set up in your face, boom, boom, on a lower time frame. But you would have seen that on a lower time frame. That's why I say you start deep diving into the candles, you start seeing stuff like this. Then look, it even put in a boosty candle, right, with the algo. So once it showed you this pattern closed and you seen this candle coming down, that's loss of progress, right? Like I said earlier, this your highest point of resistance. Price failed to make it past that. The moment price started coming down and it violated that, you could actually win short as soon as this candle open up. You feel me? And then you take that volatility ride straight out. Bam, bam, thank you, ma'am. Take your profits at the end of the day, or see if you want to hold that to the next day. Totally up to you. Yo, feel me? Make sense?
Yeah, thank you.
Ah, my pleasure. My pleasure. Any other questions on this? Anybody? You let me know. Let me know. Ooh. All right. So let's get over to Starbucks. Yeah, SB is you. There we go. Starbucks. So now I'm gonna mention this. The reason why I want to talk about Starbucks, right? Because it's another play. They had earnings, they failed. We was last night on the floor, we was going over the different targets. I know I was setting up my targets for the next day, and I was like, hey, these are my targets. I'm making a list, checking them twice, and this is who I'm going to ride on tonight. Okay. So as I'm looking, this gap is new. I'm just exaggerating the gap. So when they opened up, guess what? The more drop, right? And I'm watching them, seeing like what you gonna do. What you gonna do? Are you gonna reverse into the gap or are you gonna tank? Now, I know Starbucks is not a high flyer. They don't have a lot of momentum. I wasn't going to sit here and pick on Starbucks and simply say, hey, I'm going to ride the sharp wave down. No, I'm going to actually be intelligent about my move here. I'm not trying to waste money and get stuck into a slow mover. So once I started noticing the chart was looking like this on the MACD and on the swing, I'm like, let me stay out the way because I need them to at least retest the gap and reject or show me some of a straight decline. They was showing me flat action. They was flattening out. Everything was looking janky. They was retracing back to the moving averages. I'm like, okay, cool. Retrace back. Let me know what you got. Drop it down to a 12-minute chart because I'm looking at this at the open and I'm watching it. And I just want to pay attention and see, like, what do you have for me? Can I actually make a profitable trade here or will I get trapped in a losing trade? When I mean a losing trade, even if it did go down or it did go up without the momentum, I will lose money. So here it's setting up off that, right? The moment this thing started pulling up like this, I said, okay, cool. They're looking like bullish momentum, trying to step in and pull this, trying to pull themselves up, get their life together, but it quite didn't do it on a MACD. Now, coming over to the candles, right? Looking at these candles, I'm seeing how they rounding out. Let me see. I'm looking at these candles. I'm just watching them, right? I'm like, okay, you slowly sliding, you slowly, right? This what they doing. I know what they do. I know what tool to use. I know what tool to use. Paintbrush. All right. So they doing all of this crap like that, right? They doing all of that. Let me cut these moving averages off. So they squiggling. You see these small candles here? This tears up contracts every day out the week. It tears them up. It tears them alive, right? So you don't want to get trapped in anything like this. If it did go down, you're not making money. If it did go up, you're not making money because it's going sideways. Even though it picked up, that's not enough momentum to actually pay you out in a contract. You'll just be tying up money for no reason. Either you're going to stay in the same spot or the erosion going to kick in, especially after lunch. Your contract going to go to trash. You're going to lose money. Now, you sell a credit spread on this, that's a horse of a different story. You will be making money. You probably would have got your 75% or 50%. You want to shoot for those numbers. 100% is great, but 75, 50% is also a fantastic humble number to take profit and get out the way. That way, if it was continuing the same thing, you can re-enter the trade because you can only make 100% on the credit spread that you know. All right. So when it's moving like this, you don't want to participate in these markets. You simply say, okay, it's not doing what I like. I'm going to bow out and I'm just going to leave this ticker alone. It's trash. So you skip on to another one. You see Starbucks trash. I don't want it. Now, I seen it. I left them the heck alone. I knew they cheese slid, but I'm like, you're not worth the trouble. I'm going to move on to AMD because AMD does have more volume. More people do like to trade it and it can get down and get somewhere. Okay. So once again, I seen AMD. They fell. They dropped. I'm like, okay, great. First thing in the morning, they retest the gap, but I'm already was committed to Amazon, so I'm not gonna go over here and float the boat. I'm just gonna wait, see if the dust settles, see if I can catch a long position. Right. Once I see them break down, I took a quick scalp on them, took a little bit of profit here, then I got out the way. Once I seen it start finding support, I'm like, okay, did you finally find support? Because on another chart, this is it landed in an order block in here, but it wound up breaking down. So once I start seeing price curl up and doing what they do best, starting a nice little uptrend, right? I say, cool. What do you got? What you got on my 40, Smokey? What you got on my 40? Right? I'm like, okay, let's put moving averages back on here. I know we below the 200. I say, what you gonna do, playboy? They creep like some TLC. Boom. Come on now. Spinning. Weak sauce, bear stepping in. Back down. I jump back in. I'm swinging a put overnight. Yeah. Oh, these son of a biscuits. They picked it up a point. They were down at 143 last time I checked. Smooth though. I'm so good. So I knew you below the 200, right? That's bear territory, even on the intraday time frame. Guess what? All my oscillators are in bear territory. We can back out to the 1 hour chart, right? Reason why I have confidence in this. MACD, bear territory. Okay, great. Below the 200 on a 1 hour chart. So that at least allowed me time to take advantage during the weekly. They rejected the 5. Close below the 5. 13 say we smooth out here. And they dragging down. So these are things you pay attention to and say, hey, what is my best bet? They did give me a pullback, which is great. You can say, well, what's the discount? Take it from this swing high here down to this swing low. They didn't do a whole bunch. They barely did a 30%er. Then from there, they said, okay, cool, we're going to give it up. I said, that's good enough. I take that bet because AMD can move. Because if we're going to move, we're going to move. I ain't risking a lot. I'm taking advantage of this, right? So Simple concepts like that, just going with the flow, nothing crazy. I'm looking for opportunities anywhere I can get one, and I'm gonna wait for a pullback, a decent discounted price, so I can jump in and take advantage. That's what I like to do. Hella patient. I'm looking for the discounts. Making a list. I got a hit list of stocks I want to, come to any markets I want to hit up. I'm just keeping my eye on them, sun friendly, nothing that I got to overstress about. If I don't catch it first thing in the morning, I'll follow up with it later on. Right? That's all you do. You just simply say, all right, this is cool. This worked for me. This doesn't work for me. Boom, 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 boom. When you do it like that, you're totally smooth out here. When not, you chasing price, trying to run down on this, run down on that. You can really mess yourself up by doing too much. Doesn't require you to overthink the process, doesn't require you to over leverage yourself. You can find you a nice smooth trade, go to the option chain, look for the most volume and open interest, and then make an intelligent decision based on your technical analysis skills. That's it. Okay. So, any questions so far? Or y'all smooth out here? Or y'all just waiting for me?
What up, Neil?
Peace and blessings, baby. Peace and blessings. What it do, JC?
I can't call it just up here checking this class out before I'm about to go in this little church right now and this little hoop thing. This recorded
Oh yeah, for sure.
when you put the content on what it's gonna be on.
I'm gonna have it on YouTube. So I'm gonna post it to YouTube, but I'm gonna drop the link in the community so you're gonna go back and grab it. It's also gonna be in the playlist, the Sauce Factory playlist. So if you missed the other class, they all in there. Y'all feel me?
On YouTube.
Yes, sir.
Your original channel.
Yeah, thanks, Neo.
Oh yeah, I'm already turned up.
Yeah, yeah, go on here. Make sure y'all like and subscribe. Make sure y'all
They
like and
got
subscribe and share the sauce, okay? Yeah, yeah. Pass the sauce bottle.
Okay, that's what they do, fam. I would definitely do that. I tap in
Yeah.
with you.
All right. Peace.
Peace.
Mm-hmm. All right. Let's go. Let's squeeze in one more chart. Anybody got a chart y'all want to see? I'm about to wrap this up. What y'all got?
Can we look at Coinbase real quick?
All right. Cool. Mm-hmm. I wonder how they faring since Bitcoin starting to pull back. Oh, what you got? What you got going on with this? Actually, they trying to make a reversal. Look at that. They said no to the evening star. Say we're gonna come up. Doot, doot. I ain't charted this one. Let me go to the 1 month chart real quick. All right. So what's up with Coinbase? You long on it? You bullish? You bearish? What you got? Mm,
Yeah, I'm bullish on Coinbase for after
yes.
earnings.
Okay. Damn it, where my thing at? Mmm. Yes, sir. Yes, sir. Even there. Yes, sir. What thing at? Hold on. How long? How long? Dude. I'm bullish too. Bitcoin just need to get his life together. Bitcoin need to get his life together. Bitcoin need to get his life together. Stop playing out here. Okay, there we go. That's that. Mm. Yes, sir. Yes, sir. Okay, yep. It meet the time requirement. Okay. Now what we waiting on is if it does it, okay, you need yeah. Now, good sir, what pattern is this? Going on to the weekly. There you go.
It looked like Broadening formation to the on the end there.
Is it a wedge, a bull flag?
Nah, you close, Big K. Close. Lush got it. Thank you, Shantae. Cup and handle. This is a cup and handle. Okay. It meet the qualification over 13 days. This formed on a monthly chart is more defined on a weekly chart, right? This your swoop. It came down. See the bowl of the cup? Swoop. Price came back up. That's the top of your lid, right? Rejection. Now it's gonna go into a bull flag. The bull flag is the handle. If it just break out with the cup alone, they call it a salsa pattern, right? But here it's gonna do a bull flag action because that's how you get your measured move. You can go from the bottom of the cup to resistance, or you can use the bull flag as your measured move of the breakout. It's potential. A cup and handle. Welcome back, Rod. Yes, yes, sir. Let me add. Well, let me go on ahead and add this thing to a watch list. Hold on. Where you at? Where you at? Yeah. I checked that off then. Yeah. This spicy right here. But God gonna bless you for bringing this chart up. Okay, He gonna bless you real nice. Okay, I'll make sure I put $1 in the offering plate for you too. Okay, thank you. Yeah. This nice right here. This real nice. Yep. Now you just need Bitcoin to get his life together. Once he get his life back there and they turn back around, that pattern, that's a catalyst for it to break out. Now, that's all I'm saying. All I'm saying. Now, if it breaks out, they say if the bull, because right now, since it rejected the cup, so the bull flag, in theory, can break out. Then you got a measure move or cheer. But a boom. 447.88. That'll be a new high, but we know we ain't that greedy. So what's that measure move? Okay, 206. Well, so let's take it down. 103.
So about the top of the caution candle.
Yeah. So like right here, that'll be a good target. That'll sweep some sort of liquidity.
Yeah. Mm-hmm.
My thing at boop. There we go. Yeah, buddy. Lightweight. Yeah, but somebody pull out the stir fry. We spicy. Got a new Kendrick Lamar diss out. Got a cup and handle on coin. Yeah. It's spicy season, baby. Spicy season. Okay. Can't take the heat. Get some Pepto. It's hot out here. Yeah. I like this. Yeah. I like this right here. This is nice. It's real nice. See, cup and handles are real sweet. Now, once again, like I say, a pattern ain't a pattern until it breaks out. So this thing need to break out. You want to get a retest of the top of the flag and go. But if it just take off running, like a bad 2-year-old, yeah, you just chase it. Don't chase it, but be smart about it. Just be ready. So you see how I set my alert at the top? I want to know if it hit that high or not. I'm just gonna watch it. So we also have an order block down here too on the weekly. The 3 candlestick order block. So I can possibly see like, hey, price could be coming down a little bit more before it decide to go ahead and bust a move. You feel me? So yeah, just kind of keep your eye on this. Yeah, there you go. But you need a catalyst. Bitcoin, like Coinbase falls with Bitcoin, right? So let's say we can do the little BT. Oh wait, there we go. Yeah, TC. Then we're gonna actually do new scale. Okay, cool. So this is the scale of Bitcoin, right? Now let's turn these candles into a line so you can get an idea of what I'm talking about. So you see how they falling, Bitcoin and them goes in tandem. Okay, they flow together. They go together. Okay, they go together. See, let me bring that down, scale it down a little bit. So, and when they do good, notice that, right? You see the little difference because of this market runs 24/7, 7 days a week. This one do not. It got a 9 to 5 schedule. So when they do bad or when they do good, coin do good. When Bitcoin do bad, coin do bad. So Bitcoin gonna be your catalyst to say, hey, this gonna play out or not. If Bitcoin don't turn around, they don't turn around because everybody is controlled by this body. Okay. Yes, that's how it goes. Coinbase and all your other little altcoins
See
are
that.
signed to somebody. Okay, it's like a 360 deal. They sign to somebody that signed to somebody that say they signed to this body. This who they signed. This who they all signed to. They signed to somebody. They signed to somebody who signed to this body. Okay, yeah. So don't let Coinbase tell you no lies. Bitcoin know the truth. Bitcoin gonna tell you the truth. So when they decide to say, hey, we want to start back running towards the 70s, this probably gonna break out. If they keep going down, this probably gonna fail and it is gonna be a continuation to the downside. So just keep that in mind. Just because it looked like something nice doesn't mean it actually is. So there you go. That answers your question, good sir. You smooth.
Yeah, thanks, bro. So
All right, no
basically,
problem.
I want to wait for it to hit that
You want to
order
let it
block.
break out, let it form, let it form and break out, right? If you're gonna actually be that, let the bull flag play out because it failed that a saucer pattern already failed. So now it gotta follow the rules of the bull flag because that's what it typically does. It don't have to be a long bull flag. You don't want to be standing over 50% of the trend, so it can't drop more than 50%. Then it start turning to something else. Let it break out and take it from there. But your deciding factor is the number one financee is Bitcoin. So when if you see them doing good, you know for sure you can turn to Coinbase and say, all right, we up. You feel me?
Mm, yes, yes. Okay, thanks, bro.
No problem. No problem at all. My pleasure. All right. Any last minute questions? We out of time. Mm-hmm. Well, as always, it is a pleasure to serve y'all people on this glorious Saturday. Okay. So once again, Sauce Factory Wednesdays. Always pleasure. Stop this. Stop the share. Then